Good evening. I'm Dan Fitzpatrick, StockMarketMentor.com, and it's December 3rd. That's Monday. And I want to look at Restoration Hardware. Now, if you owned this stock into the close today, you're pretty happy. Company reported earnings. Stock's up 20%, trading at about 148. It's been up as high, I believe, as 150. Actually higher than that, almost up to 155. And so here's the thing, I didn't own, it's only stocks I'll own over earnings are stocks that I'm either up a lot on and I've taken some off the table, and then I just feel like I have enough of a cushion to hold some over earnings, and that is actually very, very rare that I do that. I typically don't do that, not in my trading account. Now in my investment account, hey, you have to hold over earnings, otherwise it's not really an investment account, is it? So of course I do that. Nothing you can do about that. You're in a stock for reasons other than just the short-term chart. But on these types of things, I have found that over time, I make more money by trading stocks after they report earnings than before they report earnings, because you can trade the extremes of the crowd. Now, I looked at the implied move of the stock based on the option prices, and the implied move was around $18 or so, something like that. It amounted to $143 on the upside. So right around there is what the options market was saying. That's where you could make money if you're selling options, is at 143 or so. It's actually not that complicated, but it's lengthy, and I'm not going to explain it to you now. So let's just put it this way. The stock right now is trading, like let's say it's up at 150. It's $7 above where the implied move is, which means that tomorrow morning there is a likelihood, and don't shut off the video now, you got to listen to the rest of it. There's a likelihood that if the stock opens up at this level, it'll trade down a bit, and that would give us a good short. It'd give us a good opportunity to short the stock, with the idea being that the stock gaps up in the morning, shorts cover, and then at the same time retail buyers come in. Professional traders say, hey, I'm happy to fill that supply. Was it $123 yesterday? You want to buy it from me at 150? Fine, I got your stock. And so they'll start selling, and all that supply overwhelms the demand from the short sellers who are covering, as well as the retail buyers who are buying, trying to get in on a good deal before everybody else does. Think Trading Places, Duke and Duke. Hey, let's go get in on it. That type of thing, and then the stock will roll over and you make money on your short. Now, the reason I say you got to listen to the rest of the video is this. Short interest is really high on this stock. So a lot of traders are betting against this move. They're betting that the stock would not move up. And hey, we're doing some remodeling in our house. My wife went and looked at Restoration Hardware, which I typically, I like their stuff. Take it for what this is, anecdotal evidence or whatever. She didn't find anything that she liked in there. I mean, I'd probably find a bunch of stuff in there that I like, but I'm not the guy that does the furniture shopping, so take that for what it's worth. I think there was, probably a reason to vote against Restoration Hardware, and a lot of bears did. They're going to be covering tomorrow. And so this stock, even though it's up so much that you would really expect it to roll over, this stock could gap and run. It could just keep going because shorts are covering their positions, and there's a lot more of them that are covering than you might think they are. Also, those that may be short right at the open tomorrow because you didn't listen to the rest of my video, short, and then when the stock's up at 155, then they start scrambling to cover, and that drives the stock up even more. I mean, short squeezes are really, really chaotic, but they're really fun if you're not caught in one. So what I'm suggesting to you is you stand aside tomorrow, wait for the stock to pick a direction. That direction will be apparent well before 9:35 tomorrow morning. Give it a couple minutes and you'll have your direction, whether this stock is a gap and run, in which case you can be buying the stock with a tight stop below the intraday high, or a gap and crap, in which case you could short the stock with a stop above the intraday high. It's going to be one or the other. The stock will not be flatlined. And so you just have to wait for it and then let the trade play out. Okay, I'll see you guys next time.